Hey, everybody. Good morning. It's Friday morning here again. Another week lies behind us. At least for classical financial instruments. Of course, cryptocurrencies are traded 24/7. Nonetheless, a lot of stuff that happened this week. And today I want to touch base with some of the stuff that happens. I want to show you some charts that, in my opinion, are very interesting to kind of understand why the markets reacted the way they reacted after the release of the inflation data this week. We, of course, want to talk about the Ethereum merge, and since we are traders, we are especially interested in seeing what type of price reaction was there actually after the merge. Where does this price reaction, which was obviously to the downside, where does that probably stem from? There are some interesting things, I think, in background information. I have my own theories why that happened, what we saw there to the price yesterday. So I obviously want to introduce those to you as well. Last but not least, we're going to talk about our Prime XBT Telegram trading competition. We're going to have a look at the leaderboard. A lot of stuff changed there since Monday, since we started that competition. New people in front, some people catching up. Also, a great result. So we want to have a look at that, of course. Some, if we still have time, some quant data, like on-chain charts, maybe from Bitcoin. And I want to give you a look out on what you can expect next week, because probably in terms of volatility, next week is going to be as crazy, also combined into one day, like what we saw this week. As always, if you want to chat here with me, if you have questions, you can ask those in the chat. If you are watching a recording of this later on, leave a comment with your question, with your remarks, with feedback, anything under the video, and we'll be more than happy to answer your question, or if it's feedback, maybe to incorporate your feedback in one of our next shows. Good. Also, join our Academy Telegram channel for market updates, for special promo codes that you do not get there anywhere else. So beginning of October, we are going to start to give away the monthly promo codes, really, that, like I said, you're not finding that anywhere else. It's free, it's fun. I always almost daily update my thoughts on the market there. I share some of my trading positions as well, to show you that I like to put my money where my mouth is. So you'll find a link to that underneath this video. And now, enough advertisement. Let's jump into the charts. And yeah, let's start with this one here. Hold on, where do I have my window here? Here we go. So what you are actually seeing here kind of looks like the same chart. And I obviously want you to have an eye on what we saw here. So this candle, and in the other four charts, it's kind of the same candle, right? And these are obviously not the same charts. So the top left one here is the S&P 500. On the right top here, euro dollar. Bottom left, Bitcoin US dollar. Bottom right, Ethereum US dollar. And what you can clearly see here is they kind of look the same since the inflation data came out this week, Tuesday, which was worse than expected. Still okay. I talked a lot about this. I wrote a lot about this. I don't want to bore you there again with the same information, obviously. But what you can really see, and this is why I want to show you this, is we have four different assets, and they reacted on almost exactly the same way. So just by looking at the chart, it's kind of difficult to tell which one is which one is euro US dollar, which one is Bitcoin, which one is Ethereum. And I wanted to show you this because this, in my opinion, summarizes the situation we are in at the moment very well, that you cannot really rely too much on technical indicators, because the market is so driven by these economic events. Like I said, the inflation data that came out this Tuesday, next week on the 21st. So what day is that? That will be next week, Wednesday. We are going to have this interest rate decision of the Federal Reserve Bank. The forecast now is plus 0.75% to 3.25%. There are some voices already out there that are expecting, maybe they are going to even raise by 1%. If that really becomes true, would of course be disastrous for not only the stock markets, probably also for cryptocurrencies, not probably, for sure also for cryptocurrencies. But of course, I'm also going to cover this more the closer the event comes. What you can expect until then is probably that we are not going to see too much movement. I also do not expect next weekend that we are going to have like crazy moves in Bitcoin, at least. Ethereum is a whole other story here, a different story. So have an eye on that, not inflation data, the interest rate decision next week, Wednesday. It is at 8 o'clock in the evening, so that's 6 p.m. UTC. More important always even than this interest rate decision is the press conference after this. Again, I'm going to cover this in detail on the Telegram channel. Might have a nice idea of also how we can position ourselves before that, but still some days to go there. Yeah, biggest news in terms of cryptocurrencies, of course, this week was the ETH merge, the Ethereum merge, which was done yesterday. So the second largest cryptocurrency in the world by market capitalization has changed from a proof of work consensus. This is the consensus that Bitcoin uses to mine new blocks to validate transactions during the process of mining when a block is found. And Ethereum has changed to proof of stake. Now, I do not want to go too much into the technical details now. It's like totally different. Means if you have a lot of Ethereum now, you can stake it, and then you have a chance of validating transaction and being rewarded with Ethereum. And we saw, and of course, a lot of people have been really anticipating this for a long time. And I think most people, actually including myself, were pretty surprised yesterday to see this large candle to the downside there. Let me just check here quickly. Here we go. Large candle to the downside. So we saw yesterday a move from opening to closing of that day of minus 10.4% down. And I think this must have been surprising for a lot of investors, for a lot of traders out there, because usually beforehand, this was always considered something beneficial because supposedly the proof of stake mechanism is far more environmentally friendly than the proof of work consensus that Bitcoin uses, that uses a lot of energy. And also there are endless discussions about, that the Bitcoin network is consuming as much energy as the Netherlands or Argentina, whatever it is right now. However, of course, as traders, maybe we're not so interested in that, at least short term. The question now, of course, is this a trend? Are we going to see Ethereum going more and more down and maybe attack those lows we had here in the beginning of June, where we fell under 1,000 US dollars? So are we going to see that again? And to look into this, I thought long and hard about this yesterday. I also made a comment on Telegram there yesterday about what, in my opinion, is the reason for this. I think it's because, first of all, if you were mining Ethereum beforehand, and maybe you invested a lot of money in GPU and mining power to mine Ethereum, so basically now your mining equipment has become worthless, at least for mining Ethereum. So what probably a lot of miners are doing right now is they switch to mining other coins that have, for example, proof of work consensus, and they get just rid of the Ethereum because they are not mining it anymore. They are not determined to only stick to this coin anymore. So probably what we saw there was really this large sell-off of miners switching to other coins now, where they still can use their mining equipment. The second thing that's a bit problematic is actually two things that, in my opinion, are quite problematic. So I saw this being posted on Twitter here this morning, that this new staking model of Ethereum could draw the SEC's attention. So the SEC is basically this guarding security Security Exchange Commission, that stands for, that watches the financial markets, that everybody's playing by the rules, that no scam is done. And it's as always been a lot of discussion, obviously, about regulation and cryptocurrencies. Now, the problem is, the SEC, for example, says, contrary to Bitcoin, Ethereum is something that should fall under the jurisdiction. That means a lot of regulatory uneasiness for a lot of institutional players that might have been eyeing or already bought Ethereum, or maybe are also thinking about staking Bitcoin to get the mining rewards from this new consensus. What I think is far more concerning, in my opinion, is that we have 46.15% of the proof of stake nodes, for storing data, for processing transactions, adding new blockchain blocks, and so on and so forth. They are in the hand of two major addresses. And it seems like these two addresses are, first of all, Lido and Coinbase. That does not mean that there's one person, behind all of this that gets 50% of the mining rewards at the moment. But it means that we have a centralized or kind of a centralized point of attack. So imagine now something happens to Coinbase, a hacking attack, something happens to Lido, a hacking attack or something like this, then all the Ethereum being staked there from everybody would be a danger, which would have disastrous results on the network. So this is a step away, in my opinion, from decentralization towards centralization. And of course, you can also say here, if we look at how's that with Bitcoin at the moment, we also see here, the mining pool Foundry USA, they have 26.7% of all hash rate. Still less than 42%, obviously, but aren't they too powerful? The problem or the benefit of these mining pools for Bitcoin and how they redistribute themselves, we also saw, I think it was last week, when we had this news coming out with one of the mining pools, Poolin, so this one down here, that they are having liquidity issues, meaning they are delaying or canceling withdrawals of, for example, Bitcoins, of cryptocurrencies that were mined over the pool. So if you have mining equipment, instead of trying to find Bitcoin blocks yourself, you can kind of give your mining power, your hardware power to this pool, and whenever the pool finds a new block, gets a block reward, you'll get your fair share of that block reward. And you have a much higher chance of actually finding blocks, obviously. And because of this pool used to be at over 10% in hash rate share of the whole network. And within those 1.5 weeks now, they have fallen to almost 5%. So you can see how things are really distributing themselves there. So it's not the same as if two centralized exchanges hold 42% of all Ethereum that is being used for staking. This is a big problem I'm seeing there, and I wouldn't be surprised if this also was kind of the one of the reasons that we saw the slump down. If it's going to turn around now, if it's going to stop, we're for sure going to have an eye on it. If you are trading Ethereum, also be a little bit careful at the moment to only rely on technical indicators, because we should, at least that's what I'm doing, I want to watch first, okay, how is this now evening out? Are we going to see technical issues? So once the trading action returns to normal, for sure, we can trade then Ethereum, for example, as with our day trading tactics. Yeah, the picture here in Bitcoin, pretty much the same, despite all the ups and downs we've seen here in the last days and weeks. We still are in this massive sideways range here that we've now established for 3 months almost. So on the 20th of September, it's going to be 3 months. Didn't see any breakouts to the north, didn't see breakouts to the south. What is nice, Bitcoin seems to have quite a little bit of demand. So we are seeing bigger orders being filled here at around $20,000 US. So seems to be that there are people willing to, take those prices, buy those prices, but probably think that eventually we're going to have a new bull cycle, and things are going to look less bleak than they are at the moment. One thing I always like to look at is this Bitcoin dominance. And actually, I've been waiting for a little bit of time now for it to jump up again. And this is what we saw. So in terms of cryptocurrencies, after the release of the inflation data, we saw the Bitcoin dominance jump up again here. So it seems like we are entering more a new Bitcoin season, which also, in my opinion, is supported if we look here at our altcoin season index from www.intothecryptoverse.com. You guys know I'm a big fan of those. We can see here that altcoin dominance is coming down, which means, so normally you would use this anti-cyclical. So whenever we see an altcoin season, it's probably time to switch in Bitcoin. I also mentioned that quite often, I think in the last 2 weeks. And it seems like this index is coming down here, maybe to enter a new Bitcoin season. And that is actually the last missing ingredient, in my opinion. So new Bitcoin season, maybe with Bitcoin dominance jumping up from 40 to 50 or maybe even 60%, that would show me, yes, probably we've seen kind of the bottom yet for the market, and we are sooner or later in the next month going to enter a new bull market. Another metric we can look there at is the supply in profit or loss. I talked about this one on Monday on the video as well. It's called the kiss of death. So let's zoom a little bit. What you'll usually see is that the bear market kind of starts finding itself once we see a larger supply of coins being in loss. So that's the red line here, then in profit. This metric switched already in the end of last week, but now went back as we saw those crazy up and downs there because we had prices north of $20,000 again. So, but we are very close. Out of the on-chain metric, probably the last one that I was waiting for to confirm, yes, this is the bear market bottom. Of course, what we never can know is the bear market bottom exactly, was it at 17,500? Is it going to be at 15? Is it going to be at 10, at 8? We never know. If you are a long-term investor in Bitcoin, you can always counter this by DCAing. And by DCAing, I'm meaning dollar cost averaging. So you could, for example, go here to your Bitcoin wallet, click on deposit. If you don't have Bitcoin, obviously yet, you can buy Bitcoin here using different methods and then just hold it here on your wallet with primexpt.com, until times are better again. Right, let's have a look here at our Telegram trading contest. So as I said, has switched quite a bit. We are now seeing Kings in number 1 with a performance of 609%, followed by Antwerps 556%, and Mr. X, I guess it's supposed to say 446%. So great performance. However, also remember that you, within the last 10 days or 10 and a half days of trading now, you have to fulfill turnover and trade requirements. So you need a turnover of 10 million US dollar tokens. You need at least 50 trades. And if we scroll here through the top 25, we are seeing some people that either fulfill here the trade number requirements or like here, Boer, the turnover requirements. But we only have one person at the moment in place 18, Downey, that fulfills both. Performance of almost 50%, super great for just 5 days of trading or 4.5 days of trading, but already fulfilled also the turnover requirement, so has already a turnover of 16 million, and the number of trades requirement, 127 trades out of the 50 required. So if we would stop now, if this would be the last minute of the trading contest, that actually would mean that Downey would come out on top and would win the trading competition because he's currently amongst the top 25, at least the only one fulfilling the requirement. But of course, still 10.5 days left for trading. So plenty of time there to turn things around. Let me quickly chat here. All right. Maybe couple of other assets we also can have a look at. Let's take this one here. So, for example, if we see also look at Ethereum versus Bitcoin, you can also see that after this uptrend we had established here, it's coming down quite sharply, meaning Bitcoin is getting stronger in comparison to Ethereum. This is also why we see here the dominance in Bitcoin rising, for example. Pretty unchanged, in my opinion, the view here on the S&P 500. What will be, again, very, very interesting is going to be the last half hour of trading, in my opinion, in the S&P 500, because then there's going to be this trading break until Monday morning again. And if we see a good indication, if we see prices falling in the last half hour, and maybe even the market closing at the lowest price, it's going to be a strong indication that probably the fear is still dominant in the market, and that Monday we're going to continue to see falling prices as well. This is something that almost never fails. Euro dollar down channel, and I've done some trades in euro dollar. I've just built up a longer term position again. If you're on Telegram, you saw that also, that I shorted here at 1.0, €500,000 euro dollar. I think with the interest rates hike, even if it's just 0.75%, we are going to see a higher demand again for US dollar, just because it's more attractive to buy US dollar denominated treasury bonds than it is to buy, for example, euro bonds. You just get more interest rate there at the moment. Same picture if you don't like euro dollar, maybe have an eye here on dollar yen, which is the same picture, just inverted, because the US dollar is here in front, the yen second, euro dollar, US dollar is the second currency of that pair. So we are coming down there a little bit now from the heights here. Pretty good here, also was signaled by our RSI hook strategy. So also for me, a reason, if we see prices going down here into this area, let's say somewhere between 140 and 130 and 135, I think it's a good area again to go long in euro, and not in euro, in US dollar yen. And you'll see that a lot across pretty much every currency out there that is versus the US dollar. You also see this in gold. So gold getting weaker and weaker really by the day. We're about to break through the average trading to the average true range that is volatility adjusted, which would be a short signal there. We are seeing oil coming down from the highs. I always wonder why I don't see gas prices here in Germany coming down, though. They are just as high as they were when oil was at 120 US dollars. But of course, good also to see that maybe things are slowly normalizing a little bit. For us as traders, it means we have to stay patient for swing trading positions. We are very dependent on the economic news. Once that picture normalizes again, so maybe November, December, first quarter of 2023, then we are going to have a time where I think trading will become more normal again, where we can better rely also then again on technical indicators for our trading. Okay, good. So if we do not have any questions, then this is it already for this week. Then I can only wish you a happy weekend ahead. I'm going to see you again on Monday. I'm going to post some thoughts and maybe an idea later on Telegram as well. And yeah, take care, everybody. And always remember to use the stop loss. See you. Bye-bye.